Welcome to Cryptocurrencies, the future of digital money show on PortfolioWealthGlobal.com. My name is Michelle Holliday. Today we have with us a brilliant investor, a trader, and a cryptocurrency expert, Mr. Tone Vays. Tone worked on Wall Street for almost 10 years. He became involved in the cryptocurrency ecosystem in 2013. Tone is a very popular and sometimes very provocative voice on the subjects of economics, privacy, and free thinking. If you've ever tuned into one of his shows, you know that we will always bring the straight talk to the table. Tone, welcome to the show. How are you today?
Doing great. Thank you so much, Michelle, for having me on. Coming to you from the Porcupine Freedom Festival in New Hampshire, known as Pork Fest. It's an annual event, libertarian focused. They've been inviting me here for many years. Finally agreed, was here talking Bitcoin, its importance, and how it can, add to the freedom fight for everyone around the world. That's why you see all these tents around me and people walking around.
It looks gorgeous, and we are thrilled that you can join us from there. We want to dive straight into the current cryptocurrency market. Now, in your opinion, Tone, has the crypto market bottomed out yet? If so, why or why not?
I believe that the market has not yet bottomed out. I've been calling for sub $5,000 price of Bitcoin since early to mid-January when the price failed to get back above 20,000. It's an unfortunate situation, but a necessary one. Markets stop when there's simply no one else is willing to pay that higher price, and they will eventually bottom. Now, I'm more of a technical analyst, and my videos deal with technical analysis and chart reading. So I'm going to stick to that instead of explaining the fundamental side as to why Bitcoin might be dropping. From a technical perspective, bubbles pop and bottom out in certain patterns. What we saw in the stock market in 2009, the market fell straight down. And in March of 2009, the market fell really quickly, and then it swiftly rebounded, and it continued to go up until present day for 10 years. That was a swift V-shaped rebound. The gold bear market from 1980 rebounded very differently. The gold market fell for 20 years, and then for 4 years straight, it just got stuck between $200 and $250. It never had that big spike to the downside. The Bitcoin 2014 bear market, we fell for almost a year, and at the end we fell so hard it was that V shape. But after the V shape, it didn't go up. It got stuck in that $200 range. We had the worst of both worlds in 2014. I don't know how the current bear market is going to end. I'm hoping it's not the best of both worlds. My most optimistic bearish target is 5,000. My most pessimistic bearish target is 1,300. My most probabilistic time target is around October into November. And I really hope that we either level out at, let's say, 3,000 or 4,000 for a few months, or we quickly fall to that $3,000 level, but very quickly rebound. It would really be unfortunate if we end up with the worst of both worlds again. And it's too early to say how it's going to bottom, but I'm almost 90% certain we are going to touch under $5,000.
Wow, and you're predicting around the October to November timeframe.
Well, I'm predicting the ultimate low to come at that time. We can easily hit 5,000 in the next couple of weeks, and that gives us another 3 or 4 months to go as low as $2,000 by November. Or we can get dragged out and only hit $5,000 in November and bottom then. There's always time component and a price component. And if we hit the price component too early, then there's more time to hit a lower price. This is why I try to do as many videos as I can, keeping other people in the loop on what I'm thinking when it comes to the price outlooks.
Wow. Now, in the extended outlook, just a little bit, take us past October and November. What do you see as a future trend for cryptocurrencies? Will they resume a bull market? And or should we expect the cryptocurrencies to trade just above their mining costs going forward?
I expect Bitcoin to eventually go up above 20,000 and make new highs. When Bitcoin finally broke above the $1,000 level in early 2017 or late 2016, it took us 3 years to get back to the 2013 high. Once we broke that $1,000 level, it only took 1 year to go from 1,000 to 20,000. This is that FOMO. This is that fear of missing out. I'm expecting that to happen again when we go back above 20,000, but it's impossible to say when that is going to be. I'm expecting us to get back above $20,000 before the halving of the reward in 2020. So sometime by late 2019 or early 2020, I expect us to be back around $20,000 and for price to take off. But that is my outlook for Bitcoin. I don't really pay attention. Well, I pay attention, but I don't really care about the speculation on the other altcoins. I think there are a few Bitcoin competitors, but Bitcoin will continue to separate from them technologically. As for things like Ethereum and all the ICOs built on Ethereum, they are just companies. And sooner or later, they're going to be regulated like companies. And to me, if you are doing an ICO, you are a of the late 1990s with no developers, no product, no customers, just hype. And I don't expect the ICOs to amount to much, but I do expect Bitcoin to continue to innovate a censorship-resistant, unconfiscatable value transfer, which is so important.
Wow, that's so interesting. Now, Tone, how can an intelligent investor reach a conclusion that the intrinsic value of any of these cryptocurrencies, or are we all just speculating the whole time?
Well, it's a little more than speculation when it comes to Bitcoin. A lot of people don't see any intrinsic value in Bitcoin, and my best explanation for Bitcoin's intrinsic value is people need to realize that for the first time in human history, you own an unconfiscatable asset. And that is absolutely amazing. Being able to properly protect your Bitcoin just makes it unconfiscatable. If you were in Greece in 2015 when your banks shut down and you had no access to your money, Bitcoin was there. It was not going to be stopped. When the Cyprus events of 2013, when the government just decided to confiscate 47.5% of your money beyond 100,000 euros in the bank, had you been protecting your wealth in Bitcoin, that would not have happened. If you have to leave, a communist regime like a Venezuela, and you have some money in Bitcoin, you can move it. These properties are absolutely amazing. Gold used to be this property, but with the advent of technology, gold became hard to use. I mean, you can't use gold on the internet. And in addition, gold is confiscatable. Metal detectors have made gold very confiscatable. And Bitcoin is filling that void. And Bitcoin is also censorship-resistant value transfer. I understand it's not always very quick for some. It's not always very cheap for some. And it's not always very private for some. But it will always get to where it needs to go. And I mean, these properties are amazing. And I think these properties will continue to add intrinsic value, because at the end of the day, all currency is confidence. The more confidence people have in any currency, the more it's useful. And Bitcoin is only not even 10 years old yet. And the confidence in Bitcoin as a medium of exchange, as a store of value, as that confidence grows, so will its intrinsic value and all of its use cases.
Awesome. Now, Tone, should the name cryptocurrencies change? Do you feel that this is not an accurate term?
I don't see it as a great term. I mean, I use it all the time myself.
Right.
So cryptocurrencies. I mean, there is cryptography involved because you have to protect your Bitcoin yourself. So the cryptography is simply passwords. I mean, that's cryptography. people like to use these terms: digital currencies, virtual currencies, cryptocurrencies. The term that we should really be using is decentralized value transfer. That's my favorite use, because I don't even like to call it currencies. Currencies have a certain government definition. Money, less so, but currency has a specific definition. It's funny how when people talk about the definition of money, they always go to Aristotle and like 2,500 years ago.
Right.
I think
You're
we
like,
can, I, you know what I mean,
I
right?
do.
I think we kind of know what money is, right? Money
Right.
is something that
We
somebody
get
else
it.
will accept as a medium of exchange. But what separates Bitcoin from everything else is the fact that it is decentralized. It has no owner. It has no CEO. It has no PR company, which is why for short terms, things like Zcash and Dash and all these other borderline centralized versions of what Bitcoin is, they have the budget to promote their currency. I'm at an event and half the stuff here is sponsored by Dash. I've never seen anything sponsored by the South African Rand, never seen anything sponsored by the Euro.
Right.
I mean, are you a currency or are you a company? And uh, and this is a bit of a disadvantage for Bitcoin because it relies on people like me that voluntarily come and speak about it. There's no budget from the Bitcoin to pay me to be here. And people will continue to recognize that, just like gold. Like gold has no budget to promote gold. It's just people don't want to sell gold. The word cryptocurrency is a bit misleading. The word you're looking for is decentralization. Is your currency decentralized? And if it is, then it's censorship resistant and then it's unconfiscatable. And Bitcoin is just head and shoulders above all others.
Right. Now, Tone, from your perspective, is there a legitimate, immediate danger with fiat currencies right now? Or is this just an overblown exaggeration from folks who like to create fear? What do you think?
That's a good question. It really depends on which currency. So I also fell into this trap of the gold bugs, thinking that my gold deserves to be worth, $1 million an ounce, and the government is keeping it down. And, the US government and the US dollar is going to collapse any minute. And then when you step back and think, you're like, well, if the US dollar collapses, is there another country that's going to be more trusted than the US government? I mean, when the US dollar became the world reserve currency after the collapse of the British pound lost confidence after the country went broke in World War One. The US waited till the last minute, showed up in World War One, and sort of claimed victory, which is in a way very similar to what happened in World War Two. So the US was able to avoid wasting massive amounts of resources, and it became the most trusted financial economy in the world. Now, it can change. I mean, China might be able to step up. Like if let's say the U.S. ends up in some kind of a massive war with Russia, and it blows through all of its resources, and it starts printing money like crazy, then sure, people will believe in a confidence of another country that's going to be more responsible with their money. But betting on these things has always been a losing bet. It's just a losing bet. Be prepared when it happens, but don't want it to happen. Because what I tell people, hey, you want some economic instability to make your gold and Bitcoin going up. But if there's
Right.
too much economic instability, no one cares about buying gold. They care about buying food. And this is why the price of gold crashed in 2008. When the financial sector was crashing, gold fell 33% because people were selling their gold to buy food. So, just be careful what you wish for when you're, betting on an economic collapse. Uh,
Exactly.
I,
Exactly.
I will add that I am worried a little bit about the European currency because I think the design of the euro is very flawed. And I've already, I mean, again, it outlasted my expectation, right? Like the market can stay rational a lot longer than a person can stay liquid. But within the next decade, I do expect the euro to break up into its components of the Deutschmark and the franc and all the others, because I just don't think that common currency is sustainable. with all of these countries that have different languages, different cultures, and
Oh,
different economies.
that's very interesting. Now, Tone, switching gears just a little bit, what is your take on the stock market right now, specifically US equities? Our company, Portfolio Wealth Global, sees a continued bull market for the foreseeable future with a recession looming, which will likely be short lived, along with a significant market correction, which will also be short lived. But our company sees stocks continuing higher for years. Do you consider the stock market and the facets of it to be attractive?
I do. I completely agree with your outlook. And I have been a big bull on the stock market for several years now. And I've been speaking at these kinds of libertarian events and anarcho-capitalist events. As early as like 2015, I started speaking at them. And I remember how in 2015, in February of 2015, I stood on stage and told people gold is a terrible investment. You should look to the stock market. And they all laughed at me. And the stock market has more than doubled since then, and gold hasn't moved at all. That was
Right?
back in 2015. I remain a big bull on the stock market for several reasons. One of them is people are still afraid to go into the stock market after the 2008 crash. That's one reason. Another reason is that historically, the stock market has underperformed. People forget that the stock market did not go anywhere between 2000 and about 2013 or 14. It was literally stuck. That's 15 years of no returns. And the historical average of the stock market is 8 to 9% a year. It needs to make up for that. And the stock market is inflation adjusted. So as the governments print more money, that's good for the stock market. And we got Trump elected versus Hillary. So taxes, he is trying to bring down taxes. He is way more of a capitalist than Hillary Clinton is.
Right.
And this is great for companies. I was laughing every time the stock market would dip as Trump raised in the polls, and the stock market crashed the night of the election. And I was saying, this is ridiculous. Trump is the greatest thing for the U.S. corporations.
Yes.
They had seen in a president in years. There may or may not be a recession, but it is going to be short-lived. I am a huge bull. In addition, I think that if there is a bubble in the economy, it's the bond market. Interest rates are starting to go up. They have no choice. And as interest rates go up, your bonds go down in value. When all of these pension funds and retirement funds that are sitting on all these bonds, as the interest rate goes up, their bond portfolios drop in value. They're not going to be losing money. They're going to want to sell those bonds. So as you sell the bonds because of a rise in interest rate, they have to invest that money somewhere. And as the stock market continues to go up, and the bond market is 10 times bigger than the stock market, I'm expecting a huge influx of money into the stock market from a potential bubble in the bond market that's
Wow.
finally coming due.
Wow. Now, Tone, how do you view the Fed funds rate trajectory going forward?
So that's an interesting question. A lot of people think that the Fed actually controls the interest rate. They really don't. The Fed is always late. I mean, I don't know if you had guests talking. A lot of people used to talk. I mean, it's a long time ago, but a lot of people blamed during the year 2000, going into the real estate crash, that Greenspan was raising the interest rate too slow. The Fed is always reactionary. The market decides what the rate is. People start selling bonds in anticipation of what the Fed is going to do, and in a way they force the Fed's hand. If a lot of people think that the Fed is going to raise interest rates, they are going to sell their bonds now, because the moment interest rates rise, their bonds are going to lose price. The price of a bond is inversely proportional to the interest rate. So if people think the Fed is going to raise rates, they're going to sell their bonds, therefore demanding the Fed to raise the rate. And the Fed does what the market tells it to do. Occasionally, the Fed has these emergency situations during the crash. But during the crash, everything was crashing. So outside of those emergency situations, the Fed is just reactionary to the market. They don't drive the market.
Wow. So the fear of it happening actually causes it to happen because what people do in anticipation of it happening.
Yes, that's my view on it. But yes.
Self-fulfilling prophecy. Now, Tone, as we mentioned at the top, you have quite an extensive background on Wall Street. From your personal experience, is Wall Street as fraudulent as many people in the alternative media project or believe it to be? What do you think?
You know what? I might have even had that sort of view while I was working on Wall Street. Now, I will say I always worked in the risk analysis divisions. We were building risk models. So, we weren't traders, we weren't bond traders. I mean, trading was always my hobby and my passion, but it wasn't what got me that paycheck. And it wasn't as wild and crazy as you see in the movies. Those are outliers. And what people have to realize, it's really not. Like the people that are working at these companies, like JP Morgan, Goldman Sachs, I was at Bear Stearns. Bear Stearns went down while I was there. Do you really think 100,000 people wanted to lose their jobs? It's ridiculous. Nobody wanted to lose their job. Most of the people that get hired there, they're very educated people. They have families, they have lives. They don't want to endanger that in any way. And the brightest people from Bear Stearns, from JP Morgan, they're the ones that end up in Goldman Sachs. It's literally full of PhDs. And yes, sometimes you get into this groupthink mode, right? When everyone is telling you that the real estate never goes down, you start to believe it, and you start, making products based on a bad underlying assumption. Um, sure, I mean, a lot of these companies can skim quarters and pennies here and there, but what industry doesn't? But as far as some kind of a global agenda, that's so not true. None of these guys want to lose their jobs. And as an example from the 2008 crisis, like who do you blame for that? The government regulation didn't do anything. They allowed all of this to go on. Everyone thought it was okay. The rating agencies thought it was okay. And guess what happens? If you want to be responsible, if you are a bank that doesn't want to lend to irresponsible home borrowers that are taking on these mortgages that they can't afford, if you want to be a responsible bank and you don't lend out these mortgages, no one is going to borrow from you. So your bank can actually go under if you don't participate in something stupid. The same thing with the credit default swaps. All of these companies like Bear Stearns were over leveraged. People were buying up these portfolios because they had a very big return. Yes, these companies collapsed because of that return. But at the time, if you are managing other people's money and your competition is taking on these assets that are providing very good returns that you can't recreate by doing something responsible, you are going to lose all of your business to your competition. So you almost have no choice but to take on things that you may even think are going to collapse. You're just praying that you can get out before them, but in reality, only so many people can fit through a door. And you end up in this group think, and there's nothing you can do. And this is how I see the ICO space right now. Everyone is in this group think that printing your own money to fund your idea is somehow gonna be profitable, and it's not. And it's this groupthink mentality. Well, if this guy ICO'd and he has the same idea as me, and all of these people just gave him $100 million, and I had to claw my way to $100,000 VC investment, and I'm smarter, what am I doing wrong? He's going to outcompete me on advertising alone. So you have no choice but to do something irresponsible like an ICO. And this is how everyone ends up in this group thing until the bubble pops. And then it's like, oh, it was obvious. That was a .com with no clients or customers. Yeah, it's bad, and there's nothing you can do about it, unfortunately. I try to educate people not to invest in things that make no sense, but they see those dollar signs and they do it.
That's a very interesting insider perspective. I've never really heard, although it's probably logical perspective, but I've never really looked at it that way from the inside. You've got to, if other people are doing it, you have to do it in order just to stay alive in the first place. Interesting. Now, Tone, does the average person stand a chance in the markets picking individual stocks, or should most people buy index funds and reinvest dividends for long-term wealth growth?
That's a very good question. I wouldn't advise any. Oh well, yeah. Well, index funds. I would simplify that into just ETFs or indices themselves, like the S&P 500 index, using the SPY ETF. I would say that's okay. Uh, Now, the average investor, for the average, well, an investor, let me define that. An investor is someone that is willing to put their money into something and hold on for years. And by years, I mean closer to decades than years. And they're willing to hold through bull and bear markets. After that, you have position traders that want to take on positions for maybe up to a year, and swing traders that want to take on positions for a couple of weeks to maybe a month. My expertise is mostly in swing trading. And I would say that if you study, if you learn, swing trading can be certainly more profitable than simply investing. But you have to treat it like a job, because it almost is a job. I would also say that this is where you need to learn technical analysis, because there's no way that you can fundamentally compete on learning about the company and watching the news, because the professionals will always beat you to that. The professionals have a lot more resources to know what's going on under the hood of the company. The professionals have resources to get up to the second news. They don't watch TV. They don't watch CNBC for news. They pay for news feeds that hit their wires before CNBC knows what they're going to talk about. So an individual investor cannot compete on fundamentals. He can only compete on technicals. He can watch what the big volume players do and how they move their price. And this is what I teach in my workshops. I teach the basics of technical analysis, and I compare it to playing poker. You have to be patient. You have to watch what happens in the price patterns. And the intuition of traders is always been the same historically. And if you treat it, if you put enough time into it, then yes, I believe that you could, but it's not for everyone. 90% of traders completely fail because they have poor risk management and they have other things during the day that take their attention. I myself spend all my time traveling to events, speaking. I'm on airplanes a lot, and I just don't have time to trade. And which is why I do it very rarely, only in my retirement fund. I try to pick direction neutral positions with options because I just don't have the kind of attention that trading deserves, because it is a risky endeavor. So if you're willing to put in the time, work, study, and have the ability to watch it, then absolutely, you can have better returns than simply buying and holding, which is also a great strategy. Buying and holding S&P 500 has been the best investment in the last 100 years.
Nice. Now, Tone, turning to the debt of our country, when will the rubber meet the road for the U.S. federal deficit and the national debt?
So you might be, it's a very interesting answer. I do not worry about the federal debt of the government. And there's two reasons for that. One, we're not even sure, I'm not even sure who that debt is owed to, the national debt. But here's what I know. The government is trying to inflate that debt away. And they would, do a better job of inflating it away if they didn't print this much. However, who is going to come to America and collect on the debt? Like, it's not going to happen. I'm sorry. Like we went into Iraq and we went into other countries. I mean, that's bad. I don't want the U.S. invading other countries. But who are we going to, upset by owing them money and saying, yeah, we're not going to pay you? Like, we're not at risk. There's way too many guns in this country from private citizens and the military itself. No one is coming to collect on the national debt. So the national debt's not my problem. My problem is the unfunded liabilities. which is not 20 trillion. It's closer to 120 trillion. And that is the debt that we owe to our own citizens. And these are all of the government employees, all of the government contractors, and a lot of the politicians have promised all these pensions and all this health care and all these other promises that they just can't meet. They promise a bunch of stuff just to get elected, and then they're gone and it's somebody else's problem. The 120 trillion of unfunded liabilities is a problem because those are your teachers, those are your firemen, those are your policemen, your FBI, and all the other agencies. And that is the debt you owe internally to your own citizens. And once again, this country has a lot of guns. So the debt that you want to worry about is the internal debt to your own people in the form of promises, because that's almost like how Rome fell. They had way too many soldiers policing the world. That was their massive public sector. And eventually, when those soldiers kept getting their medical benefits cut and their money was being debased, they stopped protecting the city and even sacked their own cities. So that's what worries me. All these teachers striking, all these firemen striking, and most of the time, that's because they were promised something by a politician that's no longer in office. And that's the big problem that kind of worries me.
Wow. Now, turning back for a moment to cryptos, is there a real economy building here? And what evidence do we have of this? Or will fiat currencies and government blockchain ultimately prevail?
Well, I don't believe in a government blockchain at all. To me, Satoshi was a genius in that he solved the problem, this Byzantine general problem, this double spend problem, and gave us this digital bearer asset on the internet. That's a blockchain to me. It has to be a proof of work. It has to have this mining structure. There's burning electricity to secure all of these transactions. That's a blockchain. A private blockchain is a fake name for a database. It's just a database, guys. There's nothing there. So will Bitcoin be with us in 20 years? I hope so. I really hope that computer scientists that are coding Bitcoin, the underlying protocol, keep it stable and give people more confidence. I believe in them. I believe that there is enough good programmers who have so much at stake to make sure Bitcoin is viable and stable technologically. I always said that, hey, if the US, if the first world governments don't like Bitcoin and want to destroy it, all you have to do is be way more responsible with how much money you print and eliminate all money laundering laws. Money is a person's property. You should not be told how to spend your money. You should not be in any kind of violations of how you use your money. If the government really doesn't like Bitcoin, great. Eliminate the concept of money laundering and don't make anything a crime related to money laundering. Remove most of your KYC laws. Now, if you are soliciting money from the public, you need to be regulated. If you are a person, you should be allowed to do whatever you like with your money. Donate it to anybody you like. Pay for anything you like. And that's what's going to destroy Bitcoin. But the governments are not doing that. They're on a mission to eliminate cash altogether, which would be the greatest thing ever for Bitcoin because it is cash. It's even better than cash because it has a finite supply and you can use it on the internet.
It does seem like that's a trajectory, the elimination of cash.
Yeah, and it's happening all over. And there are three main reasons why governments want to eliminate cash. One of them is it would allow them to set any interest rates that they like at the bank. They can start, if the government wants you to spend more money, they can force the banks to have a negative interest rate to make sure you spend your money and don't save. If there is cash, you can then just withdraw your money and keep it in a safe at home. No cash, can't withdraw. Also, without cash, like a run on the bank is actually impossible. The pictures of Greece from 2015 were identical to the pictures of the Great Depression of 1930s. People in line at an ATM machine or in running into a bank to withdraw their money. Without cash, there's no ATM machines. There's nowhere to go. There's no, the visual of people panicking running to banks, that would be gone forever. That would be in a museum somewhere. And the fourth reason is, hey, the government thinks that every one of their citizens is always a tax evader. And the reason they haven't given us this utopia is because we're all cheating on our taxes. And they think that would disappear without cash. So for these three reasons, governments are on a monster mission to eliminate cash. It has nothing to do with like terrorist financing or all this other stuff that people use their money on. Those are all excuses. It's those three reasons, and that's it.
Wow. Now, Tone, you are a very popular voice and trainer in cryptocurrencies. Please tell our audience all about what you do, including your projects, your blogs, and how everyone can follow you to keep up with your work.
Sure. So I have a pretty popular YouTube channel. Everything is under my name. I'm kind of a one-man operation, though I do need help. I'm not a great graphic designer. I'm not a great web developer. So I obviously do need a little bit of help. But you can find my YouTube channel by searching Tone Vays on YouTube. You can find my website by going to tonevays.com. I started doing this content creation for fun. I started talking about things that I know, like economics and trading, which were things that I felt I knew well. And a once a week YouTube video became a twice a week to now became a daily YouTube video where we talk about the news of the ecosystem and how it affects the people in crypto and the whole crypto space. My expertise is trading, and I started doing videos about trading and price predictions, and I was doing really, really well. And that led to more demand. Everything I do is demand driven. I always wanted to do everything just for free on my YouTube channel, but demand became big enough to where, as I travel the world and speak at these conferences, I do try to teach workshops, a full day boot camp on introduction to trading, from what is a candlestick to the more advanced measures, MACD, RSI, chart patterns, even sequential indicator and other tools that traders use to try to beat the market. And people keep asking me to go, to their country, to their city, and I keep them small. I keep them to between 10 and 30 people, and it's all demand driven. And hey, if you want to learn, if you want to be a better trader, and you want to attend my workshop, great. Just go to tonevays.com and check out the next city I'll be going to do that.
Well, Tone, this has been an amazing interview. Thank you so much for coming on the show.
Oh, thank you, Michelle. Glad to be on.
Mr. Tone Vays, brilliant investor, trader, and cryptocurrency expert. For Cryptocurrencies, the Future of Digital Money show, I'm Michelle Holliday at PortfolioWealthGlobal.com.